Welcome back traders, I'm Varun, having a decade-long experience of working with institutional funds, a hedge trading expert and specialist in the expiry tradings. So in this particular video, we are going to analyze the Nifty adjustment series. This is the episode 4 for that. And in this, whatever trading we have done in the January 2023 in the Nifty segments and all, we are going to discuss all the stuff on this. All the points, minor points, like at which point we have done the adjustments, what was the mindset on those particular point itself in that case, what were the datas on that particular point, okay. Everything we are going to analyze in this particular video. So this video will give you the complete analysis about the adjustments, how the adjustments has to be done, and at various points how exactly we think during the time of the adjustments. Each and every detail will be there into this, okay. So when we talk about the results of this structurings, it has grossed approximately 3.72 lakh profit, which is ROI of around 12.4%. And all the structurings during the period itself, the maximum DD has been around 2.9% and the risk reward ratio was 1:9. So we are going to learn how exactly we can generate consistent profits from index tradings, and by taking the minimum risk possible with the highest risk reward ratios, okay. So we are going to analyze all the structures like that. So during the analysis, we will be going forward with the price actions, step-by-step basis, each and every point, like where the trade occurred, where we booked up, when we entered up, okay, right. And it was a very crucial volatile functionings in January, okay, right. It was all the points, like it was moving at very speedy structures. It was very volatile month, the month of January, because initially the markets went down, then it subsided up in the reverse directions, then it went down again, okay, and then it closed up in the upward direction. So it was a consolidation type of the markets. So we are going to learn in this particular scenarios, in this kind of market scenarios also, in which the markets are volatile, how we have to adjust our positions timely, and what exact trades we have to take into, and how exactly we have to think during the process. In the volatile month of the Jan also, like we have made approximately 12.4%, okay, with a max TDs of 2.9%. So this proves this mechanisms that not only in the trending markets this mechanism works into, in all kind of market scenarios this mechanism works into, and it will be engrossing in around 10% to 15% ROI on monthly basis in material of the market conditions, in material of the market situations and all, okay. So let's start the analysis on this, and step by step we'll move forward. We'll see each and every adjustments and structurings onto this, okay. So let's initiate the process, okay. And for that, like we will be doing this thing in the replay mode only, okay. So let me structure the replay for you from 2nd of Jan, I guess, okay. So it has to be from 2nd of January. It has to be from 2nd of January, right, okay. Right. So let's start the process. We'll move step by step, analyzing initially the price action first of all, and then coming to the point like where we have to analyze the data and all, okay. I will keep this video crisp and informative, okay, right. So try to grasp as max as possible from the video itself in this case, and learn about the adjustments, how exactly we need to do it, right. So let's proceed for this thing. Speed will be keeping for 3x, and let's proceed. So the first trade was, we were analyzing the markets on the initial basis once the expiry has been done. Expiry was been over on 29th of December, okay, right. So analysis will step into as soon as the expiry has been done. So if you will see, the HTLV has crossed over in the upward direction, and the price is moved down below the HTLV lines. So that means this is the area at which we start the data analysis and other interpretations and all, okay. So this was the initial early points, okay, right. But I was structuredly busy in some other workouts and all, so was not able to take up the entries on this particular points and all. Else this was the initial first entry, and profit might have been, instead of 12% growth, we might have generated more than that, 16-17% and all. But anyhow, this initial entry was being missed, okay, right. So when we took up the entry was like on 2nd of January, when the price moved up and then it dropped back again below the HTLV line. HTLV line mean moving forward in the higher directions, okay. So what exactly we need to analyze on the initial basis? First of all, we will see that the HTLV line has to move forward, okay. It has to move upward directions. So over here it break the self peak, then it moved down, it broke the self peak back again, okay. And then the second point will be that the price must move down. So the price must move down below the HTLV line. So this is the point at which we start analyzing the data, the structures and all the stuffs, okay, right. And now the point comes into by analyzing the order flow analysis on this particular period, as well as the data analysis, whether we need to take up the entries or not, okay. we subsides and take decisions on that time, and then we make up the entries. Okay, so let's go to the analysis structure and see what exactly we might be looking on 2nd of January before taking up the trades. Okay, so let's go to the adjustment series over here. Okay, and meanwhile also during the trading structures we are going to make up the positions, how exactly we planned the positions on that time. Each and everything will be there into the adjustment series. So not only the analysis point by point, but also the simulations of the trades. So giving you the idea about what kind of positions we need to build on those particular points. Okay, so 2nd Jan structurings. Eventually, if you look into the data metric score was 6, it was slightly bullish, you can say. Delta we need to keep positive, and MPP, the maximum profit point, has to be infinite, so the upside has to be open in that particular case. Okay, so if you look into the datas or the structurings, we'll find like on these scenarios, the total call shorted on 2nd of Jan. Okay, it was like 23.3 millions, and total put side short positions, it was approximately 33.1 million. Okay, right. And if we talk about the change in the call side and change in the put side, so change in the put side was higher for the whole week of 27th December to January 02. The put change was higher, as well as the call change was lesser in that particular case. So that means it was a bullish formations. And then we look into the strike formations and all. Okay, obviously for every adjustment we will not be grasping the data like this, so I'm going to give you the idea how exactly we see the data on the points. Okay, so what we look into is we look into the strikes with the biggest strike points and all, with the biggest volumes and all. Okay, right, and their distances from the spot. Okay, so if you look at the put side, we have 2 strikes. The major strike is standing at around 18,000. It is an integral level, so we don't give much weightage to those particular points. Okay, right. Without the integral level, the point was around 18,200, and call side it was at 18,500. Again, that was an integral level and all. Okay, right. If we talk about the change in the put formations and all, so 18,200, there was a change in the put positions. But above that, like there was a change in the ITM call side also. So it was slightly bullish. It was not majorly bullish, you can say, because you have the ITM calls also being put forward at 18,200. So that makes it slightly bullish, these parameters and all. Let's move forward to see further data and all in that case. If you look into the OI percentile, I will be giving you the brief descriptions about the data in this particular stage. Okay, right, because this is the entry stage itself in that case. So we'll be giving you the brief descriptions about the data and all at this particular stage. Okay. So what exactly was happening in the markets? Markets initially was coming down. Okay, right, and then it started moving up. Okay, it jumped below, and then it moved up to 2nd January itself in that particular case. So the period was like the market was moving up during that particular period. And what exactly was happening with the OI percentile? Initially it moved up. Okay, with the markets coming down. And later on the OI percentile, it moved down. So the price is moving up, OI percentile is moving down at this particular stage. Okay, right. So what exactly that means? If the price is moving up, okay, and the OI percentile is moving down in that particular case, that is a bullish formations, right? Okay. So if the price moves up and the OI percentile dips down, that is a bullish formations. Okay. So OI percentile was bullish on that particular time for us. Okay. And looking forward for the other structures and all, let's go to the PCR structurings and understand what exactly was PCR standing for that particular point. Okay, so if you look into the PCR structurings, what exactly the status was, like PCR, the price was moving up. Okay, right, price was moving up like this, right? Okay, on that time, on the same note, the PCR initially was moving up. It striked up in a very high manner, and then it moved down sharply. Okay, right, it can be because of the expiry structurings and all. Okay, and then it slightly moved up. But if you look into the picture, okay, you see that there is a divergence formation at this particular point in which the price moved up but the PCR dipped down, right? Okay, the PCR dipped down at this particular level. So this was a bearish divergence. That's the basic reason because of which we were not like strictly sure that the markets are going to move up, and the data matrix score was less. It's nearby 5, so it was around 6, so it was slightly bullish. Okay, So what we can expect is, we can expect only a slight movement in the upward direction, but not the major movement in the upward direction for now. Okay. If you look into the structures of build-ups, okay, we'll see there was some short covering on this particular scenario. Okay, there was some short coverings and followed by some long build-ups, but the long build-ups were very, very short during that particular time. Okay, right. And obviously there was the bearish divergence, means the price was moving up, but the short build-up was decreasing and the covering was increasing. Okay, right. So that is like a long formations or long structurings itself. In that case, that was slightly bullish. Okay, so overall structure for the data matrix in this particular scenario was bullish. So this will give you the idea how exactly we analyze all the three structures along with the option chain and the changes in the option chain. Coming forward to the most important points of the data matrices and all, the P minus CE change. Okay, so as per 2nd Jan, the P minus CE change was extremely bearish because the market moved up, but the OI change trend was negative. That's also the reason because of which we didn't strike. That was not the point at which we are going to look into the major movements in the markets. It was only slightly bullish on that particular time. And when we look into the structurings of max pain on this particular point, when we look into the structurings of the max pain, so price was dipping down, but the max pain was constant, right? Okay, like this. Okay, so overall the price was moving up, obviously, but if you look into the structurings from here, the price moved up first, then it dipped down without breaking its lower bottom and all, and then started moving back again. Okay. So in this case, it was a bullish divergence over here because price moved down, but the max pain divergence was constant. So this was bullish at these particular points and all. So these can be the sniping points for us to trade into. And the actual snipping comes with the order flow analysis. Okay, how exactly we do that? So eventually, what we look into is, first of all, we look into the bars must be below this the black line. It is also the HTLB structurings for the order flow analysis and all. And similarly, we have the similar kind of HTLB structurings on the delta bars. We call them the delta bars, which gives us the idea about how exactly the delta is changing into the markets. So what we want is that the green bar must be below the this HTLBs, and on those particular spots we picks up the trade, we snipes up the trade, and if the market moves above those particular point, like this, in this particular scenario it moved above those particular points, so we will enter at this particular point. So this was the entry, and the reason behind the entry was we first make the datas, we went through the datas and all. Prior to that, we went to the price action. The price came down below the HTLB line. Then we went to the datas, confirming whether we need to take up the entries on that particular point or not. That confirmed that we can take up the entries, but it will be slightly bullish because delta matrix score was around 6. And then the point was to snipe the trades. For sniping, we go towards the delta and imbalance charts for the final triggers and all. And in that particular case, we find the bar and we took up the trade entries. So trade entry was approximately at this timing. So let me check out the timings in this particular case. It's exactly 9:30 over here. So 9:30 means once it's closed, it closes to around 9:45. With the pricings being approximately, the price over here was approximately 18,228. Okay, right. So this was the first entry on the charts when we take into. So the price was 18,221. It was 9:45 AM 2nd Jan. So let's go to the option simulator to take up the initial entries. So understand the process. If the price is around 18,221 and then we need to take up the buying entries on that time. So what exactly we are going to do? We are going to short 18,200 puts, nearby puts, right? Okay. Nearby strike is what? 18,200. So what we are going to do is we are going to short 18,200 puts. Let's go to the timing first of all. 9:45. Right, okay, get the option chain, 2nd January. 18,200 puts we are going to short into, right? What quantity? 20 lots. Selling will be always there in 20 lots, right? Okay. What we are going to trade next is we are going to trade 200 points below this. 200 points below this is around 18,000 calls. So we are going to buy 18,000 calls. How much volume? Half of this, around 10 lots. Okay. And then we need to find up the 18200 is this, okay, right, it is like 364. So we need to find up like 1/10 value of this, approximately 1/10 value of this. Okay, let's see. This is basically for January. This is basically for Feb, so I need to change up the futures first of all. Let's wait for this thing. This is for Feb, so we need to change up the data to January series. Okay, it has to be January expiry. 2nd January, and this has to be 26th of January. Now we'll get the option change data for 45. Okay, this is the data. Projection is like 18200. What? 18200 puts we need to sell off. Quantity is 20. Okay. Alright, 250.2. We need to buy into 18,000 call. Quantity is how much? 10. Let's take into. And 1/10 value of 18200. 18200 is like 250. So 1/10 value of that is 25. Okay, so anything nearby 25. 17100. Okay. 30 of that. Alright, this is for hedgings. Right. So this is a pair formations. This is a structure formations. This is how the graph will look into. We will see like what kind of credits we have on this particular point. So for credits, what we need to do into is we need to go to T plus 0 at 0. Okay, T plus 0 at 0 is like around 1164. On that time, what we have the credits, the credit value is 127575. So this is the credits which we have. So in case the market closes at this particular point on the expiry, so we're going to get this kind of profits. Okay. This has also been matched like you need to figure up your spot to 18221 to get a clear structurings, because the price is like 18221, right? Okay. So at this particular point, what will be the structurings? You will be having the profit of approximately 1.2 lakhs in case the markets closes up at this particular point. So we will always keep the credits with us. And what exactly the favorable point about this particular graph is, if the markets moves up, we have the open targets, right? Okay. If the markets moves down, we have limited loss structurings from this. Okay, right. And second point is we also keep up the exit levels. So where will be our exit levels in this particular case? Our exit level will be, if you are making up the entries at 18221. Okay, 18221 is somewhere about somewhere around here, this particular point. So if the HTLV line comes below this particular area or the entry points, okay, then we are going to close our positions. So it will be a very minimum risk to start with, and this is the initial point is very important. Initial point you need to keep very minimum risk. So let's say the risk is of around 50 points, so 60 points in index, okay, right, or 70 points in index. So even if it moves down from 2 to 1 to 1 to 1, like which is around 100 points, okay, from the starting entry point itself in this particular case, this is like 100 points. So eventually, and that particular point also, we will have the expiry, we will be in profits, okay. And eventually, if we talk about the spot losses or the spot structures, it will be all approximately 76 minus 55. It will be around 25,000 as a loss. And wherever we are looking forward for a target of approximately 10 times of that. So around 2.5 lakhs to 3 lakhs approximately, because we will be investing around 30 lakhs and all. And we are targeting approximately 3 lakhs out of that, 10% growth we are targeting about. So we are targeting approximately 3 lakh profit, and we have to risk approximately 25,000 and 30,000 for that. So the risk reward ratio for the initial entry is around 1:10 or more than that. 1:10, 1:12 approximately. So this is a very good risk reward ratio with the credits in hand on the initial basis. And upside is open, downside is limited for any kind of events or structurings. And then let's move forward and see what exactly happened next. Okay. So we were all set over here. We were keeping the points, the display points or the initial level of the points at this particular point. Below this particular level, if the market comes down below this particular level and all, what we are going to do is we are going to exit our position, but not the price, but the HTLV has to cross below these particular levels and all. Okay. So let's proceed and see what exactly happened in the markets and how exactly the market performed. Okay. So what we are seeing is market has moved up, okay, to certain spikes, and again it's moving up. Now it's coming down. we will be very alert because the price is near to the line which we have formed. Closing price below that is not a matter. Okay, right. What we need to look into is the price has to, the STLV has to go below that. So at this particular point, what happened? If you look into the datas, look precisely into the MACDs. Okay, so MACDs crossed over at this particular point, and I've already given you the idea like when we are going to make up the initial bookings. So that will be when we form a divergence. When we form a divergence with the price along with the MACD, and then we form up the first red bar. Okay, right. Formations after the divergence formations with a decreasing histogram. Okay, right. So in this case, this was a divergence formation. How exactly it was? See, look into this. Price was moving up. Price was moving up. STLB also was moving up. Right? Okay. So this was the area in which the price was moving up in the upward direction, and this was the area in which the MACD was forming the divergence. Only thing to look into this particular structured indicator, okay, is the divergence formations. You can also use any kind of volume indicator for fetching up the divergences. The meaning of the divergence is that the price is moving up, but it's moving up with the decreased volumes. So if the price is moving up with the decreased volumes, that means something fishy is there and the markets can turn around. Okay, right. So eventually at this particular point with the first red bar formations, okay, with the divergence on hold, with the first red bar formations, okay, with a decreasing histogram, you take up the exit points. So this was your first exit point into the market. Right, so let's move to when we close up the position, we close up the positions on 3rd of January 1515. Okay, so let's directly move towards this particular level, 3rd of January 1515 to close our open positions. And for that, like 3rd of January 1515, let's move towards that. Okay, 2 p.m. profit is 49,000, 60,000, 67,000, 1515, 77,000. So on this particular point, we are going to close up all these positions. Go to the P&L structures, close up the positions. It's 181.9, 181.9. Okay. It's 441.35, 441.35. Fine. It's 14.85, 14.85. So this was the first trade entry being taken up and closed up because of the divergence formations and structurings like that. So when we take up the entry, we are going to look into if we form the MACD divergence formations or any kind of volume indicated divergence formations and all. You can also use RSI for that. Okay. With the preset parameters and all, don't change the parameters of that because it will not change anything. You're not using the indicator. You're only using the volume divergence, for which you can use any kind of indicator which uses volume inside it. Okay, right. So that can be MACD, it can be RSI, any stuff. Okay, right. Because you are only looking forward where the volumes are decreasing, using the indicators for that. Okay. So this was the divergence formations and the first red bar formations, and you need the you take up the initial exits over there. So what exactly was the structured profit on this particular time? The structured profit on 3rd Jan 315 was approximately 77.1k. ROI was approximately 2.57% till now. Okay, so ROI we are going to calculate on the complete investments of 30 lakhs. Till now we made only one position, so investment was approximately 10 lakh. To just give you the clear idea, when we take this particular positions, okay, this particular positions and all, it will consume approximately 10 lakh on average. Okay, right. Anything between 10 to 15 lakhs and all, it will be consuming up. Okay, on average. And if you take up opposite positions, for example, you are having a buy position and you also form up the sell positions, it will also take the same margins, not more than that. Okay, it will be coming back again into the 10 lakhs and all. If you carry 2 positions in the buy segments, it will be consuming 20 lakhs. If you carry 3 positions in the buy segment, it will be consuming 30 lakhs. Okay. So at a time, we only takes up 2 positions maximum in the same directions. So maximum consumption out of the capital of around 30 lakhs will be 20 lakhs maximum. Okay. But the returns or whatever profit we are going to make, we're going to always calculate the whole structures on 30 lakhs, even if we are consuming only 10 lakhs out of that. Right. Okay. So this was the first structure. So next we are going to look into when we are going to take up the entries, because our initial entry has been closed up. So let's look into this. What you find over here is that the HTLV started moving down. Okay, right. So that is important. HTLB started moving down. It has break below the previous bottoms. Here was its previous bottom. It has break below the previous bottoms. Okay, and the price has moved above the HTLB line at this particular point. So you will start analyzing the data structures and each and every stuff of that. Okay, right, and let's see what exactly happened on that time. So we took up the sell entry somewhere on this particular time itself in this case. So this was what exact dates? This was approximately, let's go to the adjustment series in this. Okay, this is second entry will be on 4th of January. Okay, right, and if you look into the data structures and all the stuffs, although I will not be explaining each and every point back and again because that will increase the length of the video, but I will just give you the brief explanations about the structurings. So data matrix score was around it was around 3.7, less than 5 means it was bearish. It was slightly bearish, you can say, because more it is towards 0, more bearish it will be. So delta we are going to keep negative. Structure was like 152 millions of the calls were being shorted up, okay, as on 4th of Jan. And the put change was more as compared to the call change. That will decrease the ratio, the scores obviously. And if you look into the positionings, we can see very strong call side functionings as compared to the put side functionings. Call side buildups were very strong. Okay, so that makes it bearish. Coming to the data structurings and all the stuffs. Okay, we need to analyze these stuffs in the same formats as we analyzed in the initial format itself in that particular case. Okay, right. And coming to the like OI change and as well as the max pain trend formations and also, if we see the price has moved down. Okay, price was moving down on this particular point. Okay, and the max pen also was moving down, so that will be making the structure a little bearish. Okay, so spot change was negative as compared to the PE and CE change, but the OI change trend was positive, so that makes it bullish. So this will be a bullish data for us. Overall the data score was negative, so we are going to make up the bear positions on this particular point. Where we need to stand up the bear positions, first of all we are going to look into the bars which is above the line over here and the red bar formations. So anything which closes near to this, strikes below this, we are going to take up the entries over there. So price is like around, time is around 14:30, that means around 14:45 it might have closed. So let's straightly move towards 14:45 of 4th of January. Okay, so this will give us the structurings when we need to take up our next positions. 4th January 14:45. Okay, 14:45, 2:45. Right, and what we need to do in this case is we need to make the sell positions short positions. The future price is standing at around 18,108. Okay, let's structure it up. 18,108 is the price formations over there. Okay, right. So what we're going to do is we're going to short the positions. Now, how exactly we're going to form? Future price is at 18,108. So first of all, we're going to short 18,200 calls. Okay, 18,200 calls. Okay, the nearest strike is what? 18,200. So what we are going to do? We are going to sell 18,200 calls. How many quantities? 20 lots. Second step, we have shorted 18,200 calls, 200 points above that, which is 18,400. We are going to buy those puts. How much? Half the quantity, that is 10 lots. Right? Okay. And 1/10 value of what we have shorted. 1/10 value of what we have shorted. 18,200 was 19,194. So 1/10 value is approximately 19.4, somewhat like that. If we can get into is somewhat near to 19 itself in that case, will work. Okay. So let's move forward. 19.55 is fine. So what you're going to do is we're going to buy 30 lots of that. Ratio is 1:2:3. Right. Okay. You know, this is the position formations. Now, while forming these positions, we are at this particular stage right now in the graphs. So we are now with the delta being negative. Okay, the positional delta is minus 1338.43. Theta is positive for us, so we are carrying the thetas with us. Okay, right. and that's the whole structure. Okay, so this will be a negative flow for us. Okay, so downward direction, it's all profitable. Even if it moves against us, we will be there in profits because we are already having a profit buffer with us. So let's move forward and let's wait for this. It could have been a second entry over here on this particular points, but because of the data has not been relevant on that particular point, we might have not taken up the entries, else that would have made some more profits for us. Okay, right. Again, the flag formations, why? Now let's see the data in deep detail, how exactly it was forming, right? Okay. So what was happening? The price was moving down, right? Slight away from this particular point, the price started moving down. It dipped up, it started moving down back again. On the same note, if you see the histogram, it has been decreasing. The histogram was decreasing, forming the divergence with the prices. Okay, right. And this was the reason we took up the exit structurings over there. So this was the first green bar with this sluggish divergence formations and all. It has to be of some note. Okay, right. It has to be some justified divergence formations and all. And this was a justified divergence formations with the price actions. So this will be the point at which you will plan up to exit your trades once this particular bar closes up. It closes up to around 946 and also approximately 7946 was the price. And if you look into the structurings where to exit the positions, if you look into that is, so this was Nifty covering bullish adjustments. Wait for this. What exactly? Yeah, Nifty buy covering 2.0. So this was on 6th of January 15:15. Okay, so let's directly move forward to 6th of January 3:15 to see what exactly was the structure. Investment was around 10 lakhs because we have one sell positions. Capital was around 30 lakhs. So let's move towards what timings? Let's move towards 6th of January 15:15. Right. 6th of January, we have grossed the profit of 1.3 lakhs. Next day, the profit was approximately 2.26 lakhs. Okay, right. 15:15, it was approximately 1.96 lakhs. Okay, right. 6th of January 15:15 was our exit for this. So that's the time where we exited our positions. Okay, let's reconfirm. 4:15 closer, it's 3:15. That's fine. So this is the point where we need to close up all these positions. So it is at 105.8. 105.8. It is at 498. 498.75. Okay. It is at 8.75. 8.75 for this thing. Okay. This is a closure. MTM standing at around 1.96 lakhs. We were targeting approximately 10% of the investments, which was approximately 30 lakhs. So we are near to that. Okay, right. With the profit standing of around 1.96 lakhs. Okay. So the ROI was standing at this particular point of 6.53%. Best part is that when we take up the entries, we structure the tradings. Initially, we were bullish. Then we exit the bullish positions, then we were bearish, we exit the bearish positions. Okay, right, because of the divergence formation. So we need to tune up with the markets. It's not like we are bullish into the initial stance, so the markets are going to remain bullish for all the time and all. We need to catch up with the volatilities of the markets with the right instruments, and the right instrument is not like when you follow some indicator structures and all. You need to follow divergences. Okay, they are not lagging. They are actually giving you the indications prior to the movement which is going to happen. As soon as the volume start decreasing, the divergence get formed. At the right point, you're exiting. This was the right point. This was the point. So let's see what exactly happened after that. Let's move forward to see what exactly. So the market moved up sharply after that. Right. Okay. But your indication was priorly there because the divergence formation was there when the price was moving down. So you're priorly indicated that this event can take into place, and you exited just slightly prior to that. Okay. Now let's move forward. So what exactly happened on this particular time, and what exactly will be our mindset for this thing? See, if you look into the HTLB at this particular point, if you look into the HTLB, it has crossed its previous highs. Right. Okay. This was a previous peak self-structuring peak, and it has moved above that particular peak. So what you're going to do is you're going to wait for the price to move below the HTLB line. This was the area at which the price moved below the HTLB line. Then you're going to snipe this thing out with the datas. You will check up the datas. So let's go to the datas and see what exactly happened in our third adjustments. Okay, on 9th of January, what exactly was the status, what exactly happened on this particular time, right? Okay, so let's go towards this 9th January adjustments and see the data on that particular time. Okay, so if you look into the data structurings, the metric score was 6.8. 6.8 is slightly bullish only. It's not majorly or very bullish, because nearer to the 10, like data of 8, 8.5, 9, 9.5, they are very bullish. Nearer to the 5 level, they are slightly bullish. So we don't find the markets are going to move up very sharply. It will be slight movement in the upward direction from this particular point. Okay, if you look into the data, we see the call writing was more. That was a bearish point for us. If you see, the call change was also more, so that was again a bearish point for us. Data was not preferably with us with the option chain structurings and all. Okay, if we see, we have some in the money 18,000 call build-ups. That was also bearish for us. Okay, because it is nearer to the striking levels. Okay, so I can say this was the forced entry which have been taken up, because the option chain was completely bearish for us. Okay, but let's see what exactly made us to trade into this particular structurings. If you look into the price percentile for this structure, the price was moving down and OI percentile was moving up, so that is also bearish for us. Okay, in terms of the data. Okay, if we look into the PCR structurings, just below the structurings, initially the price moved up, then it moved down. It was having the lower highs. Okay, looking into the PCR from the same point, the PCR has sharply moved down, so that was also bearish. So data was not in our favor. Okay, right. So eventually, looking at personally, it might have been the bearish trade formations over here, but not a bullish trade formations. But still, because we were keen of taking the entries, as we were having no open positions on that particular time, the bearish positions were crossed over. HTLB was rising, so but data was not with us. If you look into the P minus C structure, it clearly indicated with extremely bearish formations. So 9th of Jan was actually a bearish structurings. Okay, and apart from that, the max pain was dropping down sharply with the price moving up. So this is also bearish indications. I would have given it more lesser metric score. It would have been 5.3, 5.4 for me. Okay, right. Eventually, okay. But anyhow, we took up the buy entry on that particular time with the data as being negative. So let's see what exactly happened after that. Striking it, we took up for trigger and all. We took up this particular delta bar structure, which was below this structured line, and the price was also. If you look into the price, this was the price formations over here, which was above this particular bar. Okay, so we took up the entries over there. So timing structures and everything. Let's see what exactly it is. 9th of January to 2:15. That means 2:30. That was the trade formations over there. So 9th of January 2:30. Let's move to that particular point. Datas were clearly bearish. We can see. But because we were having no open positions, so we took up the positions, and let's see how exactly it resulted. Okay, right. 2:30 was our striking structures on this particular point. 13, 15, and yes, 9th of January to 15. We see the structured data. 2:15 was the timings over here, so actually it would have been 2:30. Okay, 2:30 will be the timings for us. So let's move 9th of January, 2:30. Get the option chains. Pricing is what? 18,156. Pricing is 18,156 on this particular time. Right, okay. So, right, what we're going to do? 18,156 with the pricings. What we're going to do? We're going to sell the puts of 18,100. Right? Go to the option chain. Option chain 18,100. Sell the puts of 18,100. Price is what? 171.1. 20 lots, right? You sold it. 18,100 puts and 200 points below this, that is 17,900. 17,900, what you need to do? You need to buy what quantities? Half of this. 10 lots. Okay. And 18,100 puts, 171 it was. Okay. So around approximately 17, 18, whatever the stuff is, like you're going to take up the entry near to that. So let's move towards this. So near to that is 250. We don't take those kind of values. Okay. So nearest value is around 17,300. You always need to take up the 100 strikes because they are liquid. Okay. 20.85. What you need to do is you need to buy it. How much? 30 lots. Position formations somewhat like this, right? Okay. So what was the structures? The structures were positional delta was 1369 in this particular case. So it will be moving up. You will be generating profits out of that. Okay. When the market start moving up in this particular structure. Okay. So let's see. Let's see what exactly happened and what next points we have to focus into. So next point will be, in this particular case, we took up the entry over here. So let's structure up the HTLBs on this particular point. Okay, right? If the HTLB slides below this particular level, in that particular case, you're going to exit your positions. Simple. Right. So let's start. So what happened? Price moved down. HTLB also moved down. Okay, to this particular line. And price moved down very sharply, yeah, because the data were bearish on that particular time, right? Okay, so this was a stopping positions. So this was a stopping positions, and Nifty stop loss was done for the third adjustments, which was there on 10th of January, 10:15. If you look into this is 9:15. So 1 hour, it's a 1 hour bar, so it will be closing at approximately 10:15. So we'll be taking up 10th of January, 10:15 for covering our positions because the stop loss has hit in this particular position. Okay, so it can happen. Okay, when you're trading in the markets and all the entries and exits will be there, the stop loss can also trigger into, the profits can also trigger into. In the end, you're trading in the markets, so every kind of scenarios will be there as per the market scenarios and all. You need to just get tuned with everything. Whatever is happening, get tuned with that. Okay, in the end, you're going to make up profits if you're moving in the right formation. So obviously, when you take up the entries, your stop losses are also a must. And the best part with this kind of trading style is the stop losses are very, very low, right? With one single bar, you can stop out. But if it keep moving in your direction, it can keep moving till it maximizes the profits, till the divergence gets formed, right? Okay. So this was our stopping levels, and this is approximately on 10th of January, 10:15. Let's move to that and close our positions. 10th of January. 10th of January, 10:15, right? Okay, this was the position at which we are going to close our positions, right? So let's go to the P&L structures. See the three entries. This is 220.2, 220.2. Fine, okay. In markets, you need to accept both the profits as well as the losses. 292.45. And you need to be fast in accepting your losses. 27.05 and slow in accepting your targets. Right. So positions all closed, markets tuned. Let's wait for the next entries if we can get into. Okay, all right. So let's see if we can get into the next entries and all on this particular structured levels. Let's see what happened to the markets in this case. So it kept falling down, and no positionings till now. It kept falling down. You could have made entries on this particular level, but it has not broken any kind of bottoms. HTLB is still moving down. It has not breached any kind of bottoms and all. Okay, so we'll keep tuned in. It has moved down till this level, but it has not breached any kind of bottoms. Now it has created a curve, so it has broke his self peak at this particular point. So if the price moves above this particular point, above the HTLV line, then we are going to get alert for the sell positionings. Let's see. Okay, so this is the striking point. This is the point at which we will start collecting data and seeing whether the data are in favor of us or not. And if they are in our favor, we can take up the entries. Okay. We saw at this particular point also that data were not in our favor. Data were completely against us. The data were bearish. Only the price action was in our favor. But still we took up the entries. And because we have taken up the entries, so I've shared the trades because it has hit the stop loss also in that particular case. But eventually, after viewing the data, we can clearly get into that the data, almost all the data were against and they were bearish on that time. So data are always going to give you a better view. Price action is important, right? Because initially we are watching price actions, but the data will validate those price actions, whether the price actions are correct or not, right? Okay. If the data are aligned with the price action, then you just need to go into the order flow analysis to get the strikes, get the spikes entered. Okay, right. So you will be sniping up on those particular points itself in that case. Okay. So this is the area we will start looking forward for the data structurings on that time. And so let's move towards the data structurings for 12th of January. Timing will be around 10. So let's move forward to that. 12th of January. This is the fourth adjustments done on this particular point, right? Okay. Let's go toward the data. Matrix score is what? Matrix score is approximately 3.1. Okay, so this is bearish. Not extremely bearish, but it is slightly bearish on this particular point. No? So we will take up this particular trade right. So structured, 145 million calls sold off. Fine. Call change is higher. Great. Okay. Sell, if you will see, it is much higher as compared to the put side change. Great. Okay. If you will see, ATM sell formation is way high, way strong compared to the put formations over there. If you see the nearby strikes, call change is way high, and adding to that, the put is getting unwinded on these particular levels and all. And this is way high as compared to the put change nearby strikes. So this is way forward. It is good. The datas are negative. Okay, datas are bearish for this thing. Let's move towards further datas. Okay, you see the price changes. Although I'm not going to give you the details about each and every trades and all, but let's see. The price moved down over here. The price OI percentile moved up, bearish, clear. Okay. Look into this. The price moved down. Okay, and the PCR also have moved down slightly. It has moved down, bearish. Okay, right. This was a bearish formations, right? And if you look into the changes. Changes was somewhat bullish because the spot has changed. Spot has been negative in this case. Okay, but the OI change trend was positive, so it was extremely bullish in that case. So that was a somewhat point which may turn it out into like a slow moving trade. It may move in the downward direction, but not with that speed. Okay, looking into the max pain is moving down. It is moving down curiously. Okay, from this particular level, it has been moving down. Again, at the recent time, it is moving down, and the price is also moving down. So no divergence formations, but the price is moving down. It is bearish. Sniping the trades up. This is the bar. Okay, right, which was above this, above this HTLV line. This was also a bar which was above the HTLV line. Okay, look at this. This price bar above the HTLV line. So anything below this will take into the trades. This is the bar closing below this. Okay, so we'll take up the trades over there. 9:45, 12th Jan, that means approximately 10 a.m. on 12th of January. Let's move towards that. Okay, 12th January, what's the time? 10 a.m. Fine, 10 a.m. Right. These are the 15-minute bars. What's the price? 17,949. What we're going to do? We're going to sell. So what we're going to do? We're going to sell 18,000 calls. We are going to buy 18,200 puts. Somewhat like that. Okay, right. So let's start exchange. Option chain. What we're going to do is we're going to sell off 18,000 calls. So let's first move towards the 18,000 calls. Actually, 18,000 calls on this level. Let's sell them 20 lots. Over the whole trading, if you will analyze, only 10 lakh was being invested because we were carrying only one position all the time. Market didn't give us the opportunity to trend up and take up the second position on that time. Okay, right. 18,000 call selling, 18,200 put buying. Okay, how much levels? Half of this quantity, 10 lots. So we buy this thing, and 18,000 was a sell-off, so it was 174. 1/10 value of that is how much? 1/10 value of that is like 17.4. Somewhat near to that is we're going to take into action. Okay. 18.3 is near to this. Take it. Buy what? 30. Okay, 30 lots. Overall position of this particular package, you can check on Zero the margin calculators and other stuffs and all. It will take approximately anywhere between 10 to 12 lakhs as a margins for you. Okay, averagely. These were the positions. Going to the payoff chart, this will be the structurings. We are having the delta being negative. Okay, theta being positive for us. And let's move forward and see how exactly it performed and what exactly we need to do next. Okay. So price started moving forward, moving downwards in the direction. Okay. Still, it was not a big divergence formations, but it's okay. Okay. But yes, on this particular level, it has started forming slight divergence. We'll wait for the exact confirmations of the divergence. Okay. If you look into this particular point, this point was much better. The histogram decreased rapidly on this particular point formations. Okay, although it was having a divergence from this particular level also, you see it clearly like this. Let's see this. Okay, it was having a long divergence from here. The price has moved down. Okay, right, dipped down, and MACD was moving up. So anywhere between this particular point and all, the divergence started forming up. This particular point, below this point and all, the divergence started forming up. But it was having a recent divergence also, where the price moved down. Okay, right, and this histogram decreased rapidly. It decreased rapidly. Okay, right. So what was the point? A green bar formations that predict us priorly to the market movements and all, that there can be a change in the formations, change in the market structurings and all. And we'll take that thing and let's see what exactly happened after that. First of all, let's cover the positions. So this was a covering for the fourth adjustments on 13th of January 11:15. Okay, right. So let's move towards 13th of January 11:15. Exactly check up the price 10:15. So it was 11:15. What date? 13th of Jan. Right. 13th of Jan. 11:15. Let's move. 11:15. Get the option chains. No, get the P&Ls. Close the positions. What exactly is the P&L standing right now? 1.75 lakhs. Right. Okay. Close the positions. Bottom three positions are there. Okay. These are the bottom three positions. This is at how much? 122.65. 122.65. So simulation give you the idea like what exactly actually the positions being taken up, what kind of positions you have to take into, where you have to book into. Adjustment series gives you the clear idea about everything. Okay, the mindsets, the datas on that time, how exactly we see numbers, how exactly we see datas, what we do with the price actions. Okay, what we do with the data flow analysis, almost everything is there. Okay, these videos are going to be lengthy videos and all, but eventually they are so much informative that one single video, if you have complete structurings, complete mindset being dedicated to that, it can change your complete way of thinking and working into the markets and all. Right. 9.9, so this being closed up. Next movements. Let's see the next movements. Okay. Index trades are so powerful that nothing is above them. Right, so let's see what exactly happened into the markets. Currently we are having no open positions and we are waiting for the market movements. So market started moving up. HTLB also has started moving up. It has crossed its previous highs. Let's see if it comes below this. Okay, so HTLB has moved up and the price has moved below the HTLB line, right? Okay, obviously we don't see MACDs and all, but it's also moving in a bullish formations and all. So this is the area at which we will be keen to take up the positions for the bullish sides and all. So let's see what exactly was the timings. 16th of January 15:15 was the timings, right? Okay. Before that, let's go to the datas. let's go to the datas. Let's go to the datas of 16th. This is 12th Jan. Okay, data imbalances. This was the datas. Okay, these are the datas, right? This is 16th of January, adjustment 5. So we have around 5 adjustments in this particular trade, right? Let's see and check the data for this. Score was 7.9. It was extremely bullish at this particular point. Only the first time we got extremely bullish over here. Okay, right? So we'll seek into the structurings. Why exactly it was extremely bullish? What exactly were the structurings over there? Okay, right? And what exactly we saw for the data being into the extremely bullish side now. Okay. So data were extremely bullish into this. If you go to the data structurings and all, eventually marking up the structure points or seeing up the data points and all, the data matrix was approximately 7.9. It was extremely bullish. If you see the triggers out of that, where the trigger were forming, so if you see the triggers were over here at this particular point. It was the trigger formations over here. You see, this is the delta bar, which is below the line, green in color. This is the price bar below the line, green in color. Okay, anything which closes above this, you can take up the entries over here also. You can take up the entries over here also. We took up the entries little late over here at this particular price. So this is 16th of January, 15.00. That is around 16th of January, 15:15 was our entries for the final exits and for this final trade now. Okay, so this is 16th of January. We need to move to 16th of January, 15:15. Okay. 15:15. Getting the option change price is 17,941. What exactly we're going to do is 17,900 puts we are going to trade into, then buy 200 points below that. That is around 17,700 calls, and likewise we can trade into. So first 17,900 puts. Why? Because the future price is 17,941. So below that the striking price is 17,900. 17,900s. What? Put. Okay. What we need to do? We need to sell. How much quantities? 20 lots. Okay. Sell it off. Okay. And what to do next? 17,700. Buying positions. ITM buying. Okay. How much quantities? Half of this. ITM buying 10 lots. Right. Okay. Hedging the sold positions. Okay, hedging the sold positions. 136 was the price, right? Somewhere near to 13. This is perfect. 17,315. Okay, right. Okay, buying how much? We are hedging it out by trading in 30 lots, right? Payoff charts, somewhat like this. Upward room is open. Downward risk is limited. And we also limit up our risks by decreasing the structurings using the entry prices and all, right? Okay. So entry prices somewhat over here. Our HTLBs, our stop SL lines will be over here. HTLB must not go below this particular line. Okay, all right. Let's move. Let's see how exactly it performed. HTLB was above this particular line. It kept above this particular line. It went down again. We could have taken up the second increase over there also, okay, right, because it was bullish, but we kept one position only. Okay, markets were moving up. Okay, right. Then it was moving down. Okay, currently the price has dipped down from this particular level. If it moves above this particular level, the divergences can get formed, but also we are very close to our exits. Okay. Exit will be there on Monday 10:15. Why on Monday? Why not on Tuesday 10:15? Because expiry was on Wednesday in this particular case. Thursday was on holiday, expiry was Wednesday. So T-2, 10:15 we are going to exit. So 2 days before the expiry levels, we are going to exit our positions immaterial of whether they're standing at what kind of profit they're standing into. That is our last point. 10:15 on T-2 we are going to exit our positions. Right, okay. So let's move. This is our exit point. This is our exit point perfectly. 10:15 on Monday, we exit our positions, right? So let's go. What's Monday? 23rd of Jan. Let's move to 23rd of Jan. taking the positions 23rd of Jan. 17th, 18th, profit at 3.56. It's above our target lines, right? We targeted approximately 3 lakh profit. It's above that. 19th, 3.14. 20th, 2.82, decreasing. 23rd, 3.56. Not on 15.15. We will be closing our position at 10.15. 10.15. Yes. 3.7. So in material of structurings, anything in material of anything, we are going to close up our positions at 10.15 on T minus 2. That is final, right? Okay. 3.72 lakhs is our net profits grossed into, right? So this was the end of the trade. We closed our Nifty positionings with a profit of around 3.72 lakhs, giving us the ROI of approximately 12.4%. See, 10% ROI in a month is equivalent to 200% ROI in a year when you cumulatively add the ROIs in that particular case, compound the ROIs. So eventually your target must be to generate 10% to 15% risk-free. In all formats, risk-free formation has to be there. That is important. Okay, right. So your focus must be on risk-reward ratios. Your focus must not be on rewards only, that I need to generate 10%, 15% like that. That must not be the focus. The focus is to keep the risk as low as possible and then generate the reward out of that, and by increasing the risk-reward ratios, right? Okay. So if you're keeping the risk less and making as much as reward you want to make on that, you can make that. Okay, right. So an ideology must be index trading generates good amount of revenues, around 10% to 15% a month. In some months it will be generating even more than that. Likewise in the last month of December, it grew very rapidly in the portfolio and all. So to take up these index trades or structures like that, and to get the learnings and the concepts of how exactly we need to trade it into the live markets and all, you can connect back with me after doing the volunteer acts as usual. Okay, right. And will help you up in your trading itself in that particular case in the index trading. Although in the index trading, I only prefer only the handful selected amount of traders can work with me in the index tradings. Okay, right. But normal tradings, stock tradings you can take into on the initial basis, and then you can come into the index tradings for this. Okay, so this will give you the complete knowledge, structurings, how exactly we trade into the indexes, and how exactly consistently month by month basis on each and every month we are generating the revenues. And look forward for the next series in the adjustments and all. Adjustment series, next series will be in Adani ENT, how exactly we managed that positions and came out into the profits from Adani ENT and all. Okay, in fact good profits, very good profits from Adani ENT were made up. Okay, so let's seek into the next episode for that. Until that period, take care of your health, take care of your structurings, and trade in a systemized format only to make profits. Keep your risk less, keep your risk reward ratios as high as possible, and that's the structure you need to work into. Okay, right. So take care, peace out.